Well, welcome back. The Bank of Canada just dropped this big announcement, or was it, Josh? Rates are
Not
held
really a
again at
big
two.
one.
Nah, rates are held again at 2.25% again.
That's the fourth hold in a row. The rest of Canada might be nervous right now, but we're in Edmonton, and the conversation here definitely looks a little bit different.
If you haven't figured it out by now, Alberta definitely plays by its own rules. We're going to break down exactly what does this mean for you, whether you're planning to buy, sell, or maybe you want to renew your mortgage.
April 29th, 2026, the Bank of Canada held its overnight rate at 2.25%. And that's four consecutive holds now. That rate has been sitting there since October of 2025 with no cuts and no hikes.
The Bank of Canada makes decisions based on the national economy. So they're looking at inflation from coast to coast. They're looking at job numbers from Ontario, from Quebec. We know what's happening there right now. But Alberta, yeah, we're punching a little differently, Josh.
So while the national unemployment rate is sitting around 6.7%, here in Alberta, unemployment is only at 6.3%. It's one of the better performing provinces in the country. ATB, right here in Alberta, just raised their 2026 GDP forecast for Alberta, even amongst all of this global uncertainty and volatility.
So here's the twist that Alberta has that most people outside of the province are not really thinking about right now, but we're a net energy exporter. Oil prices are spiking right now because of this conflict that we're all very well aware of. That's actually helping us right now. So WTI is trading well above $75 a barrel. This is helping Alberta's economy. More royalties, more jobs, and more people are moving here.
Yeah, WTI closed yesterday at $97 or something. But here's the nuance. Higher oil prices, they also feed inflation nationally, which is part of why the Bank of Canada held rates today instead of cutting. So Alberta's strength is actually contributing to the hold that affects Alberta borrowers.
Let's just jump right into the market. Let's talk about what it's doing and let's see how it's going to potentially affect you. So let's talk about Edmonton real estate. I want to give you some real numbers. The average home price right now in Greater Edmonton is around $470,000. Detached homes, which are definitely the most popular, right around $590,000. So for context, this is still super affordable if we compare it to Toronto, Vancouver, or even Calgary. They're just not even in the same conversation, not even the same ballpark.
And really, that affordability is a massive draw. People are still moving here in huge numbers, even as immigration to the country is slowing down. You hear it from everyone. The conditions are tough elsewhere, but here in Alberta, that's where the opportunity really is.
This market has definitely shifted though, and inventory is up 30% year over year. Sales are still down compared to last year. This is not the frenzied multiple offer come in with no conditions that we've seen in the past.
So that's actually good news for buyers, right?
Yeah, it's great news for buyers, really. So there's more choice, less panic. There is a bit of room to negotiate, right? But, and I have to be straight with you guys, like detached homes are still strong in Edmonton. So they're still selling, they're still moving, they're attracting a lot of competition if they're priced right. But we see some inflated pricing. That's kind of maybe the game we're playing right now. So don't confuse the balanced with it's a buyer's frenzy or a free for all. Strategies have changed, but you need to have an urgency to be prepared.
So the classic Edmonton trap still applies, which is waiting for rates to drop further before buying. So, Jay, tell them what happens when rates actually do drop.
We've seen it before. Whole bunch of buyers are lined up on a fence, waiting for interest rate to drop. Interest rate drops, guess what they all do? Jump off. Let's go buy a home all at the exact same time, right? So the people who waited, they're paying more for the same home in a more competitive market. So instead of getting off the fence early and going buying before everyone else did, they're trying to buy when everyone else is. So this window definitely does not stay open forever, Josh.
Yeah, and a little bit higher interest rate is a lot cheaper than a bit higher price for sure. So let's talk about mortgages and specifically how this rate environment plays out here in Alberta. First, the oil and rates connection. Oil prices are up. Why does that mean that mortgage rates are up? And really, the answer it's complicated, and most people get it wrong.
Okay, so let's break it down for us here, Josh. Help us understand.
Okay, so variable rates, they follow the Bank of Canada's overnight rates. And the bank held today. So if you're on variable, your payment doesn't change, full stop. Now, fixed mortgage rates, that's the different story. Fixed mortgage rates follow the Government of Canada bond yields. And bond yields creep up for two reasons. One, inflation fears. And there are fears of inflation because the price of oil is up because of the war and the energy price hike. There's also inflation fears and that bonds don't like it when governments borrow more money. And that's also happening. So right here in Alberta, we might be cheering for higher oil prices, but at the same time, those higher prices are putting pressure on your fixed mortgage rates. And really, that's the trade-off.
As Albertans, we're happy we get some more money coming in because of our oil that we're selling, but we're going to pay more at renewal time.
And speaking of renewals, this is a conversation that every Albertan homeowner needs to pay attention to. Over 1 million Canadians are renewing their mortgage this year. They locked in back in 2021, most of them under 2% interest, and they're going to see payment increases of a few $100s a month. The Bank of Canada estimates 6 to 10% higher payments depending on kind of what the rate was.
That's some serious money, right? Like that's like your grocery bill, maybe your holiday slush fund, like hockey fees. It's everything. That's a lot of money.
Yeah, and even those are all more expensive, right? So every dollar matters. But here's the Alberta specific piece. Don't just let your bank auto renew you. Your bank will send you a renewal offer, and it might or might not be their best rate. But as a mortgage broker, we can shop not only dozens of lenders, we can strategize for you. In today's market, the difference can be thousands of dollars over your term, not just in interest, but in payments. So if you're renewing, but also thinking about moving, upsizing, downsizing, maybe you've got debt, other things, you need to look at the whole picture. Blending, porting, breaking early, these are all options. And most people don't even know about them until it's too late to choose the right ones.
Let's talk about some practical examples, Josh. There's 3 different people typically that you and I both deal with, right?
Yeah. So the first type, number one, is if you're a first-time home buyer in Edmonton who's been waiting for that perfect moment.
Here's the honest take on Edmonton right now. So you can certainly buy a condo in the $200,000 range. That's awesome. Townhomes, 300,000 and up. Great. Detached homes, you're still in under $600,000. So there's definitely something that you can buy. Compare it to Toronto, Vancouver, even Calgary. You're in a privileged position. So I wouldn't waste it by waiting forever. I think this is the time.
Yeah, so for that, go ahead and get a pre-approval now, lock in your rate, hold, know what your number is. That way, when the right property shows up, you can move on it quickly. You don't have to scramble, and you can get ahead of anybody else who might be looking for it too.
I get this question all the time, and I tell them you got to talk to Josh. But if I got a renewal coming up in the next 6 to 12 months, what should I do?
You know, this one's kind of urgent, right? Start that conversation 4 to 6 months before your renewal date. I get calls from people whose renewal is in a week. Too late. Even 30 days before is kind of too late. You can often hold a rate today up to 4 months in advance, and then still we can monitor for better options closer to your renewal date. The worst thing you can do is do nothing. The truth is your bank is not your financial advisor. They just want to make money. Your broker is watching out for you.
The third one is someone that comes to us all the time. They're like, hey, it's time to move. We got to move up, move down, move sideways. Maybe we're just like switching areas of the city or whatever it is, right? Inventory's up. Market's a little more balanced, right? So as a buyer, you got a bit more time. As a seller, you got to be cautious. Got to make sure you market it correctly. So this is a great time for a strategic move. You know, sellers have more competition than they did last year. So you got to make the price right. You got to present it very well. But buyers have more options as well. So if you're each one of those, you can negotiate fairly on both sides. And it's maybe a lot less stressful to make that move.
And you know, we can map out the mortgage math for you on both sides of that transaction as well, so that there are no surprises. Here's the bottom line. The Bank of Canada held its rate. It's not the end of the story, though. It's just the context. And so what matters is how it connects to your situation, your property, and your goals right here in Edmonton.
We have this advantage. Let's get you a plan and move ahead.
I'm Josh Tagg. I'm a mortgage broker. My job is to help make sure that you understand the options available to you. Let's reach out and have a real conversation.
And my name is Jay Lewis. I'm a realtor here with Remax Excellence. I look forward to speaking with you soon.
We have links in the description, phone numbers, book a consult. Let's talk.
If this helped you in some way, if it made sense of what's going on, share it with one of your friends, share it with someone else you know that's maybe in the same boat. We would love to speak to them as well.
And click on like for the video, subscribe to our channel, and hit that bell for notifications. We'd love to share more with you in the future. Drop your comments and the questions. We're right here.
See you in the next one.